Explore Guyana's business landscape with Above Board, brought to you by Cerulean Incorporated. Join host Lindell Danzy Black as she interviews top business leaders, revealing insights into thriving industries and investment opportunities. Covering tech innovations to entrepreneurial strategies, Above Board is your guide to successful investing in Guyana. Dive into prosperity with us. Your journey to insights and opportunity starts here.
Hello, welcome to Above Board. I am your host, Lindell Danzy Black. Today's guest is Mr. Joel Bhagwandin. Mr. Bhagwandin is a director at SphereX. He is also a financial, economic, and investment advisor and a public procurement commissioner. Mr. Bhagwandin is a seasoned finance and business professional with nearly 2 decades of experience in the financial sector, corporate finance, management, and consulting. Thank you so much for being here today, Mr. Bhagwandin.
Thank you for having me on this forum. It's my pleasure to be here.
Thanks so much. Joel, you and I know very well how Guyana has been on the forefront of the international community, international press, international analysts, and they have many questions about what's happening here. And because of that, we know that you understand the issue of accessing finance and investment capital in Guyana. And we have a couple of questions for you today. We hope that you will indulge us.
I'd be happy to.
Excellent. Okay, so from the just looking at the economic overview of Guyana, I have a question on that for you. What is the current state of the Guyanese economy, and what are some of the key drivers to that economic growth that you see?
Thank you very much for that. Very important question to begin with. And if you may permit me, cognizant of who your audience is, that is particularly an international audience. Prior to the discovery of crude oil, Guyana was not very popular. When you speak of Guyana, people mistake us for Ghana. And because of that, I'd ask for your permission for me to give a little bit of history so that the viewers could understand where we came from economically. And then I'll put that into context to say what is the current state. So quickly, without going into a lot of details, which you could get on Google, to summarize our history, we have essentially experimented since post-colonial. I'm speaking here in the post-colonial era. We are nearly 60 years of independence. For this particular period, we've experimented with different types of economic and political models. And there was a time in the late 80s, coming down to the early 90s, where Guyana was in a state of bankruptcy. And at that time, we were so bad as a bankrupt state, where our debt was almost 9 times the size of our economy in terms of GDP. That's 900%.
Wow.
And then under the late President Hoyt, LFS Hoyt, he had no choice but to engage the IMF, who then assisted us to put together what was called the Economic Reform Program and started the whole privatization and so on. And by the early 2000s, we were able to achieve economic stability. So we would have transitioned out of a centrally planned economy to more of a market economy, privatization, more of a free market economy to where we are today. And from 900% debt to GDP, double digits inflation, as high as 87% inflation at one time in the 80s and 70s, devaluation of the exchange rate because of that situation. By the early 2000s, we moved from a GDP position of less than $200 million at that time to just over $3 billion US. Our debt to GDP came down from 900% to less than 60%. Our inflation came down from a high of 87% to low single digits at that time. Of course, we had other problems during that period, but despite all of that, you could imagine the struggles we've had as a country and our economy, what we've been through over the last 3 decades to where we are today. So I say this importantly because it is important to understand that we came out of bankruptcy. There was a time when we were bankrupt. We achieved economic stability and sound macroeconomic indicators long before the discovery of crude oil. We discovered crude oil in 2015. And when that discovery was made, our GDP was 4 billion. Per capita income was nearly $5,000, 5,000 US dollars. Inflation was low. Debt to GDP ratio was under 50%. Where we are today, what is the current state? Today, current state of the economy after 3 years nearly of producing oil, we're now producing maybe close to 400,000 barrels per day from 2 FPSO. Our GDP has almost tripled from 4 billion to now, as of 2022 figures I'm citing here, about 14 billion US, 14.3 billion US dollars. Per capita income has now moved from 5,000 to $17,500. Debt to GDP is now down from less than 50% to about 40% to 22%. That is our debt to GDP, very, very low. Maybe the lowest in the world, if not this part of the world, right? Or for our category of economies, small developing economies. Um, our inflation rate is below the global average, and it is projected to abate further to lower single digits by the end of this year. Our balance of payment indicators are healthy. All of the macroeconomic indicators, inflation, reserve, exchange rate are stable. These are sound indicators that are conducive for investment, particularly international investment, because the first thing international investors, when they're assessing a market to decide whether they should enter in whatever field, whatever business, whatever opportunity they're looking at, is number one, the political risk. And right now, considering where we came from historically, from a global perspective, our political risk is perceived to be low to moderate. There is relatively a stable political environment. The only thing that we have a concern about that is hovering up over us is now in the geopolitical arena, vis-a-vis the Venezuela Guyana border controversy. That's a different matter. And the economic indicators are well. To your question, to the second part of your question, what are the drivers? So certainly the drivers of this growth is from the oil and gas sector, largely from the oil and gas sector, driving a substantial part of this growth. But as well, the non-oil economy, the non-oil sectors are also doing well, because in 2015 to 2020, the non-oil sectors were not doing so well. And the incumbent government would have implemented a lot of measures, as well as reverse a lot of fiscal policies, tax measures, fees, and so forth that had effectively increased the cost of doing business previously. By virtue of doing that, reversing all of that and removing other taxes from some of these sector specific, forestry, for example, in non oil sectors are now doing well, recording 4% and 5% growth year over year. Agriculture, there is the government at the country, rather, Guyana, has been given the responsibility by CARICOM to lead the regional agenda in food security. And there is a target whereby we are looking to reduce the regional food import bill by 25% by 2025. And that food import bill currently stands at 5 billion US dollars. So 25% of that is a lot. It equates to a lot. And in terms of our specific country specific targets, based on the investments that we are making towards that goal, I think we are leading. All the other countries in CARICOM are behind in terms of the targets that they're supposed to be making. We are leading in that regard. So we're doing well. The non-oil sectors are doing well. Agriculture, the government is driving it by virtue of implementing the types of policies, fiscal policies, providing the fiscal incentive, the fiscal environment to drive that as well. So those are the drivers. And but before I conclude on the driver is also aided by the local content legislation, which has effectively enabled the country to maximize in country value from the 75% cost oil to currently it's about $700 million a year, which is poised to increase to $1 billion in over a year in local content spend, US dollars. So that has played a great role as well to distribute, to capture more value from the cost oil spend in the oil and gas sector for the local indigenous businesses and Guyanese.
Guyana's business. Okay, thank you so much for that comprehensive overview, Joel. But you touched on what was actually my follow up question, and that is the legal and regulatory frameworks that are available in Guyana. What is the stability and predictability of the legal and regulatory framework here that enables the access to finance and investment capital? Are you is there anything that you would like to share on that?
So generally, if I understand your question, generally, let me speak generally first. The legal environment in terms of doing business in Guyana and the regulatory environment, from the perspective of business or investors' perspective, their concern in that regard is whether the legal and regulatory system is working, meaning particularly whether there may be issues with the authorities and whether if they are to take legal recourse to resolve an issue or to resolve a dispute, whether the legal system is working. And we have seen cases of that where that is working. For example, you had a case with the local content, um, which was well covered in the media, and the court ruled in favor of the business. And there are many other cases where the courts ruled in favor of the business.
In
So from that,
favor. Joel, just 1 minute on this one, because I just want to kind of put it into the perspective, or maybe the question wasn't clear. It is, for me, it is mainly about that enabling environment and the legal framework that enables. I do appreciate the citing of the precedents on the case, but could you kind of just step into that enabling environment, and then we can talk about the case as well, because I think that the case is also important to bring
from
up here
from
too.
from my experience and from where I sit, I would say yes, the legal environment generally is stable. And while we can argue that the bureaucracy is still a lot, the red tapes in terms of doing business out of those regulatory requirements and so forth. But there is a commitment. There is a commitment on the part of the government to continuously improve in that regard. And so what you have seen laws have been reformed, new laws have been introduced. For example, in our real estate sector, we've never had an organized or regulated real estate sector. We've recently tabled new laws in Parliament. We've recently passed new laws, rather, the real estate bill. We have the Condominium Act. So, in recognition of the dynamism and the evolving business environment, credit to the government in the sense that they have more or less done a gap analysis. They know where there is a lack of legislation to provide for the types of investment that we now need, and they are now introducing new laws to cater for those. A lot of new bills being introduced in Parliament to improve the overall legal and regulatory environment, as well as amending existing laws. Take, for example, in the petroleum sector, in the petroleum industry, we have been operating within a very old, a very dated Petroleum Act, dated since 1986 or something thereabout, or even before then. And we have recently passed a completely new, modern petroleum activities bill into law that would repeal that old act. So from, by citing those examples and from that perspective, I would say the legal environment is and regulatory environment is relatively stable and conducive to attract investment and to, de-risk investments, de-risk businesses as well, the risks. Yeah.
Precise. And you cited, and you quite aptly cited the precedents of that company who actually won the case.
Right.
So we actually
Right.
do have, precedents that works
Correct.
in favor of exactly what you were talking about. Okay, so I wanted to now look at the financial institutions, the financial infrastructure in Guyana, including banking and capital markets. What is your view of that, and what kind of advice can you give to investors coming in?
So our capital market is still largely underdeveloped and still largely unsophisticated. So international investors would be accustomed to trading by the minutes in stock on Wall Street, for example. In Guyana, there is trading not by electronic means, but manual physical means, and not on a daily basis. More, I think it's on a weekly basis. And the market, you know, using some academic theory here now, literature, the efficient market hypothesis. We're in the weakest link where our financial market is does not, stocks, for example, does not reflect, current information. Or if there is an adverse, I was teaching a class a few days ago and I was using the same example. In an efficient market, if say a business is trading, let's say American Airlines, and there is adverse publicity, instantly from the time that news hits the market, stock prices start to go down. In the case of Guyana, extremely bad news could hit the market and nothing happens to your stock prices. Nothing happens to the
Yes,
value of
yes,
your investment. It does not react to that. So
indeed.
so 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 that's the first thing to note. It has its advantages and disadvantages. The second thing is in terms of the broader discussion home here about access to financing. My views on that is more to the contrary of the popular views. You often hear about, oh, it is difficult to access financing. You don't get financing from the banks. The banks don't want to lend to startups and all these sort of things. And there is this perception that, oh, it is so difficult to obtain financing. But there's two sides of a coin, right? And my contention is that there is really no access to financing problem. What there is how to access the financing. And that is where we need to focus the conversation or the dialogue. It's how to access, not the access of itself, because we have excess liquidity in the system. We have over 2 billion US dollars sitting in the bank, ready to be deployed. That the banks are taking their excess liquidity and they're deploying it elsewhere, owing to lack of good opportunities to deploy that money here. Not to say that there aren't opportunities, there are, but you know, you don't just put money into a business, or you don't just lend money for an activity or a venture just like that. You've got to create a bankable case. You've got to create a viable project. You've got to demonstrate that you have a good business model. You've got to demonstrate that your business is a going concern. It is properly managed. You have a proper organizational structure in place. You've got to demonstrate that you've done your studies. You have a feasibility study depending on the scale and the complexity of the project and the investment. We can talk about this for hours and for days. You know, so the problem here, really, the message that I want to focus here for this podcast is that we don't have a problem to access financing in terms of we don't have financing available. Financing is available. Financing is available. The banks have capital to deploy. There is excess liquidity. And we are not only limited, thanks to the fact that we're an open economy, we're integrated with the rest of the global economy. We are not only limited to accessing capital from the domestic market. We can access capital from the regional market, And further afield, we can access capital from international markets. And we have been accessing capital from international markets and many other institutional financing agencies, lending agencies such as the IDB, the IFC, which is the private sector arm of the World Bank, the US Exim Bank, the African Exim Bank, the UAE. There's a few out of there. So we are not short of being able to access funding in terms of different sources. We have a lot of sources of funding that we can go to. What we have to be able to do now is to prepare ourselves. How could we access those monies? Do we have a bankable business case? How do you invest time in structuring your project properly to be able to access that? So that is the situation
Right.
here at home.
And Joel, is that for just for local businesses, in terms of, if in terms of accessing finance? Do you have any cases at hand, for example, where foreign businesses have come in and maybe partnered with a local bank, or have worked with local banks, or even financial organizations here?
Foreign businesses that I know of, they come with their own capital. They already have access to capital from international sources, maybe from their home countries. And there are cases where regional and foreign parties come and they partner with local businesses and they create a completely in the a locally bred, locally run entity, and they do as well access resources from the domestic institution. So yes, there are cases
A
of
few.
such. Yeah.
I'll tell you why I asked that question, because we had that question at least 3 or 4 times of clients of Cerulean who would ask about finance and access to finance. So I wanted to put it out there to you, because sometimes, especially, I found that we had the two of them were actually Caribbean regional organizations trying to come into Guyana and asking those questions. Because remember that we also, our investment makeup is where we see a lot of international persons, but there are regional people who will be listening on, and it's important for us to be able to tell them how others have done it. And the local content legislation is very clear on that as well, in terms of partnering with
Yeah,
local
and
companies.
as you mentioned the local content, I don't want your viewers to get the wrong idea, because there is this perception, particularly by outside, well, I shouldn't say outsiders, international players, that, and even some locals here, that the local content is a barrier. No, the local content is not a barrier. We I was part I was instrumental in the creation of local content. I contributed to the creation of that legislation when I served as analyst at the private sector commission. The first thing, the local content in the oil and gas sector, you have maybe close to 500 different types of goods and services that this sector requires in the upstream. Then you have midstream and downstream activities. You have about 500 of them, right? Or more. So we have only carved out 40, less than 1% of the total pie that you could go after. 40 subsectors for local content, for local indigenous companies. And then recognizing that we may not have all of the capacity and capability, we've set targets. So there is a 40%, 50%. Very few were pegged at 90%, and I believe only one was pegged at 100%. Only one. All the others, you still have some bit of leverage there, right? So that's two things to note. The third is the Local Content Act is designed in a way to encourage participation by regional and international companies by virtue of of fostering partnerships with locals. So you could still come in with a 49% stake, right? And then outside of that 40, if you're not listed, if you're providing a service that is not listed in the local content schedule, then you could come in 100% foreign and operate. So I want to make those particular points. It's not a barrier to foreign investors or international players.
Absolutely. Absolutely. Thank you so much for clarifying this. And I think that's such a valuable point, Joel. I wanted to move a little bit and ask about currency and exchange controls. So, in your view, how is currency exchange regulated? And are there any restrictions on repatriating of profits
No,
as far as your knowledge goes?
we're 100%. We're 100% free market in the true sense of the word. There is no control. There is no restrictions on repatriation of profits. So free free capital flows in and out of Guyana. No restrictions. Our in terms of our exchange rate. Now, normally economists would tell you that countries that with oil bonanza and that are projected to earn this huge windfall from natural resources such as oil, you tend to suffer from what is called the Dutch disease. Now, the Dutch disease is where you have a change in relative prices by way of a substantial appreciation of the exchange rate. Now, that is a real threat which we have to manage. And so far, we've been managing very well. Our exchange rate remains stable, relatively stable. There is fluctuations, and those fluctuations are based on market forces, demand and supply, but nothing substantial that would destabilize or cause you to suffer any major losses on exchange rate activities, and right. So our exchange rate is stable. That's the most important thing.
Yeah. Thank you. Thanks for sharing. Um, I wanted to ask you about risk because I think that is an important consideration, always. Um, what are some of the key political, economic, and operational risks associated with investing in Guyana? And what could you advise investors on, maybe mitigation practices that you've seen?
So right. So this is the point I made earlier. The first one is political risk, and
Yes,
you have outlined it in
right.
in the correct order of priority. That's how investors look at it. Number one, political risk, and there are two dimensions of political risk. For me, right, there may be textbook might have different multidimensional, different theories. But for me, there are two dimensions of political risks. One, political stability and instability, and two, the second aspect is whether in the political cycle, which is a 5 year cycle, meaning every 5 years you could have a change of government following elections, whether there would be continuity. Largely, there are going to be changes. Different government, they come in, they abandon certain plans, they go and move in a different direction. But whether there is going to be continuity and respect for certain contracts, like in the case of the oil contract, sanctity of contract, one government enter into an agreement with an investor, whether that agreement is going to be changed through if there is a change of government. And so the incumbent has demonstrated that it would respect contracts despite its limitations that we can argue about, entered into by that government, by its predecessor, with investors. So that's the two dimensions of political risk that I want to amplify here. So you have a government that you can be assured you're an investor, you enter into any substantial agreements, there's not going to be any changes to those terms, at least unless that contract expires, right? There are going to be changes generally, but your specific contract, when it expires, or if there is a breach, that's a different matter. If there is a breach of the terms and conditions, those are different matters. On the other aspect of political risk, speaking of political stability, now political instability in a Guyanese context, there is historical events would tell you, would point you to this, where in our past there have been politically motivated crime and violence, and those are events that scare away investment. That is scary for private, not only foreign investors, but local investors, right? Because those type of events, you have the risk of damage to property, loss of property, and so on. Those are huge risks for private investors or private capital. So, from looking at our history to where we are now in the political environment, we have seen that we are that era has more or less diminished. And I don't think, while the risk would always be there, I personally don't think we're gonna have a return of that, because we have seen we have seen positive signs of inclusiveness. We have seen, for example, the government and the opposition is unified in no uncertain terms on the border controversy. We have seen appointments of key personnel in the opposition appointed by the government. For example, Carl Greenwich, who is a former minister under the opposition, he still is an executive member of the opposition. He is working with the government. He's an advisor to the government. We've seen an appointment of another top executive in the opposition who's been appointed ambassador to, been given a diplomatic appointment. So we have seen, and I know for a fact that informally, informally, and when I say informally in a Guyanese way, it is what we say behind the scenes. There's a lot of collaboration on other matters. So from that, with all of that in mind, I think political environment is stable. It has been the most
Is
stable since
stable.
independence.
Right.
Since independence.
And on the economic and operational risk, what
On the
would you
economic side,
say?
yeah, the economic risks are also, I would say, the economic risks in terms of investing in this market is low, given the indicators that I've just mentioned: strong GDP, triple GDP. We have the lowest debt to GDP ratio, stable exchange rate. The foreign reserve is climbing 1 billion and climbing. If we add the natural resource fund to that, it's going to be 3 billion and over, and it continues to climb. Right. So strong macroeconomic indicators. Inflation is below the global and regional average. So the economic risks is very low, are very low. Operational risk, well, those operational risk is more specific to the type of operations. I won't be able to speak too much on that, because
In the
yeah.
context of human resource as it relates to the operational risk, what are some of the things you can say on that?
Yeah, we
Yes.
have a human resources, we have a human resources problem. And what is the problem? The problem is, again, coming out of our history, we've lost a lot of our bright people. They fled the country. And the resultant effect of that is that we've ended up with, we have a labor force. Labor force is about, based on the last labor force study, it's about 545,000 people. We have the lowest labor force participation rate. It's among the lowest in the world, of 49%. Maybe it's up now by 52%. That was about that number is about 2 years ago. With all the construction and all that has happened since then, maybe the participation rate is up from 49 to 52%. I don't envisage a bigger jump than that. So that is one thing. The second thing is the less than 5%, again, citing that same study, of our labor market population possess a tertiary level education. So we have a huge skills deficit that we need to confront, that we need to operate within. So what are the challenges? We have a small pool of resources, human resources, local human resources that are skilled, that possess tertiary education, and that means you're going to have to work, you have to invest in the local human resources. That takes time. So that means you'll have to import people. You might not find skills here that you need, so you'll have to import the skills in the interim. So that's the situation with human resources. And given that you've mentioned that is the perspective you're looking at in terms of operational risk, of course, we have the infrastructure. We have an energy problem. We have an infrastructure deficits. But these are problems that at the national level the government is combating. For example, they're investing in major transformational projects to reduce energy costs, to improve reliability of energy, gas energy, hydro, etc. And they're investing aggressively in infrastructure to address the infrastructural deficit that we have.
Indeed. Thank you so much for that. And we can't talk about investment if we don't talk about taxation, Joel. What is the tax regime that for foreign investors in Guyana? What are your thoughts on taxation here?
You see, that's the beauty. We don't have a separate regime for foreign investors and a separate regime for local investors. Across the board, level playing field. It's the same tax regime that applies to what we have is different categories.
Yes.
You have commercial, you have non-commercial, and you have the telecommunications sector that attracts a different rate. The telecommunications sector taxation, corporate taxation rate is 45%. The other sectors outside of that are 40%. And there is another one, I can't recall the other category. I don't want to call the incorrect figure, but the other category is lower than that.
Lower than that one. And my final question for you today is about public private sector partnerships. Are there opportunities in your view for investors to engage in a PPP arrangement, or do you have any case studies that you'd like to cite in that regard?
That is a model that the incumbent government has adopted a long time to be able to achieve some of its development agenda and to fund. The first such model, for example, was the Barbies Bridge. The Barbies Bridge was built through a public-private partnership arrangement. That was the first. Then you had um, you had several others, but in different forms. Right now, the the soybean project, the government talks about this soya. That is a consortium that the government put together, and it is a form of public-private partnership because the government has also, I believe, they have co-invested. They have provided the incentives. The government also co-invests, for example, in the build the shells for what you call these call centers, and they look for private operators to operate them. That is a form of public-private partnership. The same for an agro-processing facility in Essequibo, where the facility, the structure is built and owned by the government, but it is now leased to a private investor to operate it. All these are different forms of public-private partnership. Um,
Or
what
public
else?
private? Yes.
There are a few others that I can't remember right now, but
Thank you so much. You've given us quite a number of cases in that regard. And just although I said it was my last question, but while you were speaking, something came to mind, and that is, when you're talking about investment, you need to look at also exit strategies.
correct.
So, what options do investors have, if they would like to exit such an arrangement?
I would say all of the options that the textbook talks about, all those options are available. Right?
Available
That's
here.
the safest
Well,
answer because I can't think of a
yes,
specific example, but but
example.
maybe I could use this popular case as an example with the sale of Scotiabank. right?
Oh, yes.
Scotiabank is an example. But
Right.
Scotiabank's exit, their decision to exit Guyana is not a Guyana decision, really. It is really a strategic decision where it's a strategic decision to exit this market, this regional market, because they felt that, there is, relative to the size of their balance sheet, it's operating here is not really making any sense for them. So they prefer to focus in other markets. But of course, they had to go through. It's not easy said than done. You have to go through regulatory approvals, and it was not approved in Guyana because Republic Bank taking over Scotia. Because this is a transaction in the financial sector. It is different from other traditional non-finance sectors because there are various ramifications for the financial sector. If Scotia, if Republic was allowed to take over Scotia's balance sheet, right, take over Scotia's operation, that would make them the dominant financial institute because they already are the largest in terms of market share. That would significantly increase their market share, and therefore you're not doing well in terms for the consumer, right? And then the government has other considerations. They don't want one bank to have so much control. So it is in the government's interest politically to ensure that they create an environment where you have that fosters competition. So they were not happy. Right. They were not happy with the exit. That transaction was not approved. And if Scotia wishes to exit, they could exit, but not to Republic. They got to find somebody else. But I believe they've recently, I mean, I've been told this, I don't know if anything has changed, that they have decided to stay. They've decided to stay in the Guyanese market. So with the exception of that, that is a little bit, banking and the financial sector is a little bit different from other industries. You could exit by selling out your stake, getting a buyer. Oh, we recently had an exit, a more suitable example to demonstrate. The largest private investment right now is this shore-based development to serve Exxon 2025, Yellowtail, and future projects. That was made up of three massive consortiums. Sorry, a consortium of three massive local investors, three big names in the local market, and one of them recently exited by the other two buying out his stake. That is a form of exiting. And the reason, because I was familiar with that project. I worked in the preliminary stages of that project. So I'm familiar with the numbers, I'm familiar with the metrics and so on. And I think it was a smart move for that investor to exit because comparing the return on that investment to other opportunities that he could better deploy that capital, he would get higher returns. So I think it was a very strategic and calculated exit given the vast amount of opportunities that would give you greater return than that investment.
Indeed. 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 Joel, we could not have chosen a better person. Thank you so
You're
much
welcome. Thank you for having
for
me.
the wealth of information shared. And we never end our interviews without giving you an opportunity to tell our audience something about, something that you're passionate about, whether it be your business, literature, anything that you would like.
There
So
is not
please feel free to tell them.
there is nothing that I'm more passionate about than doing exactly what I do, which is this.
Oh, wow.
This is what I'm
Wow.
ever so passionate about. Doing what I do. Of course, I'm
Right.
a family. I'm a family
Excellent.
person. I have a beautiful family. I have a beautiful daughter. I enjoy.
Oh,
Apart from
wow.
that, I'm extremely profoundly passionate about doing what I do. And you can read. Your viewers could just
Right.
Google my name and they would read and see all of my writings, and it's on my
Right.
LinkedIn page.
On your LinkedIn page. So you'd like them to follow you on LinkedIn.
Yes, yes. Please do.
Okay, excellent, excellent. So viewers or listeners, we would be really happy if you were to follow Joel on LinkedIn. He has a wealth of information and a wealth of advice that he can give to you if you're coming into the Guyana market. And Joel, we want to say thank you so much for your time. Thank you for being a part of what we are doing here, because no one is better to talk about what is happening within an industry but the experts themselves. We have a tremendous amount of respect for experts because we believe that's how we get things going and that's how things should be done. So thank you so much. Do have a great Diwali. It's Diwali holiday today in Guyana. So have a good Diwali, and we thank you once again.
Thank you very much again for having me. Have a good day.
This wraps up today's episode of Above Board, brought to you by Cerulean Incorporated. We are dedicated to elevating businesses in Guyana and the Caribbean through innovation, ethical practices, and high integrity, and a deep commitment to excellence. Cerulean is your partner in navigating the complexities of business growth and success. Are you planning to start or expand your business within the Guyanese market? Cerulean Incorporated is here to guide you. Learn more about how we can help by visiting www.cerulean-management.com or follow us on Facebook, Instagram, and LinkedIn at Cerulean Inc. or Cerulean_Incorporated. Join us next time on Above Board, where we continue to unlock the potential for success in Guyana's thriving business landscape.